Hey everybody, what's going on? It's James here. Wanted to shoot a quick video. I think I'm going to do this one on YouTube and on Patreon. And this video is going to be more about investing versus trading. I want to explain some differences, and I want to give you a very simple strategy that I did not invent, but it's kind of a time-tested strategy for investing, and I'll talk about how this works. So before I jump into the content for this video, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already. And of course, don't forget to check the description for a link where you can join the Patreon for just $7 a month. That gives you access to more frequent updates. It also helps to support the channel and keep new videos coming. So here's the thing. I got a comment not too long ago in the Facebook group a few days ago where somebody said, that I claim to be an investor or whatever. I don't know exactly what they said, but essentially they said they want to know how much of a certain coin I had because, I am supposedly this big successful investor. And I'm not sure where that idea came from because I'm not an investor in cryptocurrency. I'm a trader, and they're very, very different things. But if you are an investor, it doesn't matter what asset you're talking about. If you are an investor, one of the easiest ways to go about investing in any asset is through a cost averaging strategy. And the way cost averaging essentially works is you're not trying to catch the bottom, right? You're simply investing in an asset that you believe will be worth more in the future than what you're paying for it today. It doesn't mean that you don't believe, that it can't drop. It doesn't mean that you don't think it will drop. It simply means that you don't care because you think long term it will be worth more. So I'm going to show you a couple of coins and a couple of assets and how this could work. And the first one and the most obvious one, we'll just go ahead and do Bitcoin first, right? So let's say that you were a big believer in Bitcoin in 2019. And, in the summer of 2019, there were reasons to be bullish. There were certainly reasons where, people were saying that it was going to break new all-time highs and all these things. And even though I was bearish at that point, it doesn't mean there weren't reasons to be bullish. Let's just say that you got caught up in that FOMO and you decided to buy Bitcoin at the very tip top at $13,800, right? And let's say that you decided to buy, for easy math, $1,000 worth of Bitcoin. Well, obviously when it fell to 3,800, that would be a painful drop. But if you're an investor, what you're looking at is you're not looking at this going, oh no, what if it drops below 13.8? You're looking at it, will it be worth more than 13.8 a year from now, 2 years from now, 5 years from now, etc. All right, so make these numbers a little bigger so they're easier to see in the video. And essentially what you could do is you could say every time Bitcoin drops by 20%, I'm going to put in another $1,000. And we can do this real quick. So just times 0.8, right? So let's make these all big numbers. And we're going to put in another $1,000, right? And then it drops another 20%, another $1,000, another 20%, another $1,000, another 20%, another 20%, another 20%. Never got that low. Okay. So when it's all said and done, this is what your investments would have looked like. And even though you started really high at 13.8, if you actually do the math on this, you would have $6,000 invested in this hypothetical example. And if you, that's not what I want to add up. And if you figure out how much Bitcoin that actually bought you, you can take 1,000 divided by the price. And when it's all said and done, add that up. That $6,000 investment would have bought you roughly 0.8 Bitcoin, right? Meaning your cost average per Bitcoin would have been about $7,354. So again, when Bitcoin was sitting at $3,800 back in March of 2020, you would have been down nearly 50%, sure. But look where you'd be now, right? Look where you'd be with Bitcoin at $49,000, right? I don't know what Bitcoin is even at, 49,161, right? So your investment would currently be up about 568%, right? Just like that. No magic technical analysis, no magic, crystal balls, none of that stuff. Just a continued belief in the asset that you're investing in. And what some people will do is they will actually make larger investments as the price goes down. So for example, every time price drops by, what we say, 20%, And these numbers, it's up to the investor, right? 10%, 20%, 30%, 50%, whatever it is. But what they'll do is they'll actually increase the investment. So if it drops by 20%, they increase the investment by 20%. And for a person that did something like that, they would have had a total of nearly $10,000 invested, which would have bought them 1.5 Bitcoin. Their cost average would have been just over $6,500. And of course, they would be up right now about 645%, right? And you might be thinking, well, this only works because it's Bitcoin and Bitcoin has exploded and all these kinds of things. That's true. The asset has to go back up, obviously. But if you look at it like this, if you just put money in at 13.8, when Bitcoin fell to 38.58 in March, that means that Bitcoin would have had to go up roughly 357%, right? In order to get back to what you paid for it. That's a lot. Obviously, in hindsight, we can say, well, that happened, but at the time, it would have been a lot. It would have been like, man, I hope this comes true. Whereas by cost averaging, this investor knows, hey, it's only got to go up to 65.94, which is not even double, right? Watch how this drastically changes, right? Only has to go up 70.9% in order to break even there. And I don't want to beat a dead horse, but if you did look at Bitcoin, and if you weren't trading, like I approached it as a trader. So when this fell down here and closed around $5,200, my thing is I didn't want to have a 30% stop loss on a quote unquote trade, right? But if you were investing with no stop loss, then you might have said, well, I'm going to go ahead and buy Bitcoin at $5,300. I'm going to put in, 10% of my fund into Bitcoin. And then if it falls to 3,000, I'll buy another 10% of my fund. And if it falls to 2,000, I'll buy another 10%. If it falls to 1,000, I'll buy another 10%. And what you would be banking on is you would be thinking to yourself, surely at some point, Bitcoin will be worth more than $5,000. It might go to 1,000 first, it might go to 500 first, but eventually you would be banking on the belief that it would be at least $5,000 again, right? Whereas with a trader, that's not how a trade works. With a trader, it's a very definitive, if this drops below XYZ price, I'm going to close this trade for a loss, right? So anyhow, I personally believe that the market, stocks, crypto, the housing market, I believe all these markets are in this giant bubble, and I believe that it's only a matter of time until that bubble pops. I don't know when it's going to happen. I'm not saying it's going to happen tomorrow or this week or this month. I don't know. Nobody knows. But one thing that I shared in Discord today, and I can't stress this enough, is there are people who are chasing these gains at $50,000 Bitcoin, and they're chasing these gains hoping it goes up to 100,000 or hoping it goes up to 150,000. And, that's double your money, maybe triple your money. And I'm not saying there's anything wrong with that, but unless you're starting with a lot of money to begin with, it's really hard to make, what I would call life-changing returns with a 2 or 3x. If you got 100 grand and you're going on high leverage and you're being silly and gambling, maybe you could do something with that. Or even if you have a little bit less, but you're using crazy leverage, and you get lucky, sure, it might work out. More often than not, people are going to lose money by over leveraging themselves, but that's another story. On the flip side, what I'm doing, right, is I'm simply waiting for my investments. I'm not going to chase this down. I will wait for it to crash, whether it's crashing from 50,000 to 10,000 or whether it's crashing from 100,000 to 20,000 or whatever the case is. Same thing with stocks. I'm waiting for all of these things to crash 50, 60, 70, 80%, whatever the number is. And that is where I'll start putting my investment funds back in the market. I'm not a salty bear who's sitting over here like, oh, I'm just missing out. No, not at all. I mean, I hope it continues to go up. I realistically do, because I think when it crashes, it's going to be, painful, and I'd rather make as much as I can before it crashes and have that much more to invest when it eventually happens. So I'm not rooting for a market crash, even though I believe it's imminent. I'm, I guess, more objective now than I have been, because at this point, my HODL portfolio is worth a fair chunk of change. We're not talking small money, but we're not talking huge money either. But I thought I'd shoot this video. I know it's a little bit different. I know it's not really a market update. That's why I didn't call it a market update. It's just a different strategy, and it's something to consider if you're not a trader and you are wanting to invest, earmark a certain amount of your money for each investment and maybe move into that investment in pieces and parts versus throwing all your money in at the first opportunity. And there will be those times where it doesn't go down and it goes up. You're like, darn, I should have put more in. But there will be those times where it keeps going down, and you'll be very thankful that you didn't, put all of your money in up front. That's the main thing that I did wrong in 2018, right? I put a ton of my money in the market in the first quarter and second quarter of that year. And even though eventually I did make it back when the market turned around, had I been loading up on coins in the third and fourth quarters, then in 2019, instead of just making my money back when the market recovered, I would have actually made 7 figures, right? Doing nothing. Just with the exact same amount of money invested, but invested closer to the bottom. So, hope you guys enjoyed this video. I'm going to go ahead and wrap it up there. Please remember, I'm just some guy sitting in a spare bedroom, so nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed this video, be sure and give it a thumbs up. Make sure you subscribe to the channel. And again, if you have not already, you can check the description for a link where you can join Patreon for just $7 a month. That gives you access to more frequent updates and helps to support the channel. This is James with Crypto Common Sense, reminding you to please trade safe.